struggling to make ends meet? It's time to take control of your finances and build a brighter future. Join me as I dive into the world of income producing assets versus liabilities, uncovering the secrets to financial freedom and wealth accumulation. Discover how to escape the rat race, create passive income streams, and secure your legacy, your financial legacy. Don't miss out on this eye opening journey to financial empowerment. Hit subscribe and like, and let's start building wealth together. Hi, I'm Dr. Brown. I have 13 years experience in real estate investing, and last year our company did $953,900 in real estate. Today we are unlocking the key to income producing assets versus liabilities. So I am going to get started this morning. I'm going to share my screen, and we are going to talk about income producing assets versus liabilities. A lot of people don't know what that is, but today we are going to dive into it. Income producing assets versus liabilities. Again, I'm Dr. Brown. So on today's agenda, we're going to talk about topic 1, income producing assets, what they are, some examples of that, their characteristics, their purposes. Then we're going to switch over to liabilities, what they are, and some examples, and their characteristics and purposes. And then we're going to talk about some key differences between income producing assets and liabilities. So first off, what are income producing assets? They are investments or possessions that generate regular income or have the potential to do so over time. So some examples of income producing assets are real estate, which are mortgages or investment property. Then we have and that generates rental income, not just a regular mortgage where you live in the house and there's no money coming in but money going out. We're talking about real estate where you're investing and using that investment as rental income coming in. Then we have stocks, and we have dividend paying stocks provide regular income in the form of dividends. Bonds pay interest regularly. Business ownership, owning a profitable business or shares in a business that distributes profits. Royalties, income from intellectual property such as patents, copyrights, royalties from books or music, etc. And then peer-to-peer lending, earning interest from lending money through platforms like Lending Club or Prosper. So these are income producing assets. Again, these are assets that are bringing in income. They are also assets that are bringing in positive cash flow, which means that, for example, in real estate, if you are renting out a property and the rent from that property is covering the mortgage, the expenses, and the taxes, the insurance, then that would be, and you have money left over, that would be positive income, which would make that an income producing asset. So now we're going to look at some characteristics of income producing assets. So you have regular income. They provide regular income streams either through dividends, which would be through the stocks, rent, which would be through the real estate, interest, which would be through the bonds, and the peer-to-peer lending, or profits, which would be through the royalties. Then we have another characteristic would be potential appreciation. They may also appreciate in value over time, providing capital gains when sold. So that would include the real estate and the stocks. Diversification, they allow for diversification of income sources, reducing risk. So if you have more than one of those income producing assets that we talked about, the examples, then that is what we would call diversification, which means that you don't have all of your money in one asset. You have money across the board in 2 or more assets. That's what we're talking about when we're talking about diversification of income sources. So you may have real estate and stocks and bonds. You may own a business and have real estate stocks or royalties from a book that you may have written or music you have produced. So when we're talking about diversification, that means that you have assets, you own assets in more than one asset class. All right. So then the purpose of income producing assets is to acquire to generate passive income, which can supplement or replace earned income from a job. They are essentially for building wealth and achieving financial independence. So your income producing assets, when they have grown over time and you have quite a bit of income coming in from them, they can, in fact, supplement your lifestyle, which means that they can actually pay for where you are living. They can pay your car payment. They can pay all of your bills. And that way, when you are accumulating income from other sources, then you can actually use that income to acquire more income producing assets. And that's what we do. We acquire income producing assets so that they can pay for our lifestyle. And also, when we generate more income, that can go to purchasing more, whether it's stocks or real estate or whatever we have going on at the time. So, my motivational speech here is every accomplishment starts with a decision to try. So, if you never try, then you never know whether you would have succeeded or not. So every accomplishment starts with the decision to try. You just have to get started. You just have to try. And once you do that and acquire the knowledge that you need in order to um, acquire these income producing assets, then you'll find out that they make your life a whole lot easier as far as the stride of your life. You're not on the hamster wheel going, 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 working from sun up to sundown. No, if you have income producing assets that are paying for your lifestyle, then you're not the one who has to be out there just grinding, grinding, grinding every day. So let's make sure that we are accumulating those things that are going to help us and not those things that are going to hinder us. So now let's look at liabilities. Liabilities represent financial obligations or debts that an individual or entity owes to others. For example, mortgages, which are loans taken out to purchase real estate that aren't bringing in rental income. Car loans, loans used to purchase vehicles that are not being used, for example, as rental vehicles. I've seen some people purchase cars and put them on different platforms and rent them out and generate a lot of income from that. Credit card debt, debt accrued through credit card purchases. Now, credit card debt can be leveraged if you are paying off that credit card every month. Now, some of us get into the practice of carrying a balance every month, and that is what accumulates the interest on that credit card and makes it a liability, because now you're having to make payments and on the principal of the credit card and the interest. Personal loans, loans taken out for various personal reasons. And student loans, loans taken out are used for educational expenses. And on that last one, let's try to make sure that our children and grandchildren are not taking out these student loans, because it is starting them out in a negative situation once they graduate from college. So let's try to have our children and grandchildren to get scholarships or work studies or something that's going to pay for their college so that they are not in a deficit when they graduate. So some characteristic of liabilities is negative cash flow. Liabilities generally lead to negative cash flow as they require regular payments of interest and or principal. So with your mortgage, your car, if those are things that you are not using to rent out or using in your regular business, then they are liabilities because they are taking money out of your pocket and not putting money into your pocket. Risk of default, failure to repay liabilities can lead to serious consequences such as foreclosure, repossession, or bankruptcy. Another characteristic, interest expenses. Liabilities often come with interest payments and can increase the total amount repaid over time. So that's just like we were talking about with those credit cards. If you only make the minimum payment every month on your credit card and you carry that balance forward, if you look on your statement, it will show you how long it will take you and how much more money you will spend if you do that. So that is the reason why we want to pay off credit card debt each month, so that we are not carrying balances forward and accumulating all of that interest, because it does accumulate over time. So the purpose of those liabilities are often incurred to finance purchases that would otherwise be unaffordable. So we want to make sure that we are living within our means, because it is a very stressful life to live outside of your means. That means that you're going to have to do that rat race thing. You're going to have to be on the hamster wheel grinding, all of those things. But if we purchase income producing assets and live within our means, then we will be in a very different place. We will be in a more profitable place. Some liabilities, like mortgages for investment properties, can eventually lead to asset acquisition and wealth accumulation. Like I was saying, if you're purchasing real estate, for example, we talked about house hacking. If you purchase real estate and you live in that real estate for a year, and then you later turn around and rent it out, then that mortgage or that real estate has now become an asset. It only is a liability if you have purchased real estate and you're living in it and it's taking money out of your pocket. And if you have an end strategy that says, okay, I'm going to purchase this real estate, I'm going to live in it for 1 year and 1 day, and then I'm going to turn around and I'm going to rent it out, then okay, now we have an income producing asset that is also not only bringing in rental income, but it's also appreciating in equity. So you're winning in two ways with that, because some people do buy real estate and do house hacking. For example, they may buy a duplex and live in one unit for 1 year and 1 day, and then move out and rent out that unit along with the one beside it. Same with the triplex or fourplex. Now that is actually a real estate strategy that will help you to accumulate wealth and real estate very quickly. And also that is a way that you are able to put down a low down payment instead of the 20 or 30% as a real estate investor. If you're living in that real estate for 1 year and 1 day, then guess what? You're only putting down 3.5% of the purchase price. So that is a real estate investment strategy where people do actually house hack. They buy properties to live in them, and then eventually they rent them out. Excessive liabilities, especially high interest consumer debt, can slow financial progress and lead to financial instability. So that's what I was saying. Let's make sure we are living within our means, because excessive liabilities, high interest consumer debt, you're going to be behind the 8 ball. That means that you are going to be in financial trouble, and you are going to struggle if you are living outside of your means. So if you are doing that, let's try to get on track and make a plan to get out of that debt, so that you can get on the positive side of things. So some key differences between income producing assets and liabilities. For one, is cash flow direction. So income producing assets generate positive cash flow by providing income, money coming in. Liabilities generally result in negative cash flow due to ongoing payments, money going out. Another difference is wealth versus erosion. Income producing assets contribute to wealth building by generating passive income and potential capital gains. That's your rental income and dividends from stocks. Liabilities, especially high interest debt, can erode wealth over time due to interest payments. That's those credit cards. Risk and return. Income producing assets typically carry some level of risk, but they also offer the potential for higher returns. Now with real estate, that is talking about the market value of your property. Some years they go up, some years they go down, but they always go back up again. And the same with stock. Some years is down, some years is up, but usually overall, stocks are up over time, at least 10%. So with liabilities, they represent financial risk without the potential for investment return. So when you're paying money out of your pocket and you're not getting anything back in, then guess what? Your financial risk is great, and there is no investment or return on investment for your money, because your money's just going out the door. You know, with credit cards, personal loans. Some people are getting those payday loans that are like 300% interest on there. It's, we just have to learn how to live within our means so that we can have a better life. So in summary, income producing assets are essentially for generating passive income and building wealth, while liabilities, if not managed carefully, can hinder financial progress and lead to financial instability. Balancing the acquisition of income producing assets with the management and reduction of liabilities is key to achieving long-term financial success. So let's make sure we are making a plan to be on the positive side of things financially. And let's make sure that we are decreasing those things that are hindering us, are putting us in a negative cash flow space. So thank you. I'm Dr. Shelley Brown. I do have a course on udemy.com, Essentials of SFR Investing Strategies Made Easy. I will pin that in the first comment, so you can just click on it and get started right away. And I'm going to stop sharing my screen. Now, I hope you all found a lot of value in this video, because it just depends on what season you are in your life, whether you are on the positive side or the negative side of cash flow. But we want to be on the positive side of cash flow more than on the other side. So just let's make plans to get our financial life in order, so that we can have a life where we're not striving, but we are striding. And that means that we are not having to grind and be on the hamster wheel and in the rat race and stressed out. Let's make sure that we are making our own lives better by living within our means and by purchasing income producing assets instead of liabilities. All right, so that's all that I have for you today. And if you have not already, please like, subscribe, and hit the notification bell so that you see content when I am posting it. And that's all I have, and I will see you next time. Goodbye.